So that's why I cannot see. Okay, now have a look. Do you see about the record item? It's still records, is it right? Okay, it's good. Oh, I see. Maybe because the black one, so it's now here. This is the most inconvenient for investor. We call this is the sideways. This means that the stock price just go up, go down, goes up, go down, and they cannot predict. Yeah. Here you see. Sometimes the stock price go up here, and we think that the stock price will continue to go up, but actually no. After that, they go down, and when the stock price go down, they think that's all. Maybe the stock price will continue to go down, but actually no, the stock price goes up again. For this chart, we call this the sideways. And for the sideways, we have two special factors. One you see here, this one, you see? What do you see here? Do you have any conclusion when you see that? Exactly. Upper band is right. So it means this one we call about the resistance. Yeah, resistance. You see here, whenever the stock price go up at that level, the stock price has to go down. Whenever the stock price reach that level, the stock price cannot break this one, and the stock price goes down. Again, you see, for this one we call this a resistance level. And also you can look at here. Whenever the stock price go down to that level, it's right, go down to that level. We call this one support. There is some factor that support the stock price at that level, and the stock price cannot go down. And do you know at that point what does this mean? Yes, we call this one a support level. But look at in the markets for this one, what does this mean? What does this mean? What do you think? Yes, it means that you just imagine this is the game between the buyers and sellers. And whenever stock price go down, buyers they buy a lot. Okay? Yeah, they buy a lot. One, if we can buy at that one, I think it's excellent, right? And it tells you that when the stock price like this one, the buyers they think that the stock price now so cheap and they will buy a lot, make the significant increase in demand, and as a result it pushes the stock price goes up again. Okay, and again whenever the stock price reduce at that level, many investors they are willing to buy and they will buy stocks, so push the stock price go up again, similar like this. Like for example, in Ho Chi Minh Stock Exchange, whenever the VN index around 700, actually many investors they think, oh, the price is now cheap enough for them to buy. And when almost of investors they want to buy, they will push the stock price goes up. Again, for this case, whenever stock price move this one, for example, before we got around 900 points for VN index, and now we have 1,000, for example. Whenever the stock price went up at 900 points for VN index, for example, yeah, and investor they think that wow, the stock price is so expensive. This is a good time for them to sell stock to realize the profit. And when many investors they think, oh, this is a good time to sell, so they sell a lot. As a result, they make the stock price go down. Okay. And Chu Anton asked me the question, can point out some reason event can have a stock break the reason. Okay. And you see, here, if nothing special occur, and actually like no clear signal for investor to predict the stock price in the future, just they just bargain together and the stock price just in sideways. Except for some special thing happen, it will make the stock price break the line here. Yeah. So that's why for technical analysis, whenever it's among that range, no one can tell you that the stock price will go up or go down. We call this sideways. And for this one, normally the technicals they advise investors should term out the market, and wait because in sideways, no clear signal or trend to short or to long stop. So that's what in this one, no. And here, when something special occur, like the new information, or for example, America, they announced that now they have already got a vaccine for COVID-19. And you see for this one, it's have VN index break that price and go up, which is higher than 1,000. But look at in the past, 1,000 point for VN index can be considered as a very, very strong resistance. Whenever it's reached to that point, many investors, they don't invest for long term, they invest for short term, and they think that, oh, this price is so high already. Now they will sell to realize the profit. And when many investors sell, it's put the stock price go down. And also for technical analysis, actually, sometimes we don't explain by fundamental, but based on emotion as well, emotion of investor. That's why this I answer your question, Anton. That means you asked me about the some reason or event here. In case that we have some special information that's positive, so it will have the software breakdown. And they found that whenever the software can break down this one, it will set up the new trend. Here, whenever the stock price just move in that range, no trending. But whenever in case I suppose the stock price break down the trend, and here they call this is the indicator, the clear signal when it's break down the resistance level, the stock price will continue to go up. Okay? That's why for technicals, they observe and they wait. They wait to see about some clear signal and they make decision. Or for example, for this case, they will wait. They did nothing at this one. And they see whenever the stock price breaks for the supporting level here, it means that now no factor can support the stock price anymore. And the stock price have already break down and it will continue to go down. And whenever it's break here, this is some clear signal, tell you. And here, just another example for you to observe the resistance and support level. So this one, Stop. And okay, for this one, like example here. Whenever the stop right break down the support level, the stop right continue to goes up. And it takes from 2000 quite old, is right, but it means this is the real chance for the real stop price. And here, interesting here, you see at that point, quite clear signal, is right? Quite clear signal that okay, the stop right break this resistance level, and we expect that the stop price will continue to goes up, but actually finally the stop price go down. So another suggestion that we need to wait for quite clear signal, and maybe we can say, oh, this one is not clear enough, we need to wait here. But when we wait for that very clear signal here, this is too late. Do you agree? This is a disadvantage for technical analysis. Is that right? And another reason one, do you know how to read that? Is right? You know how to look at for the supporting level, resistance level. For me, I know that as well. And now imagine that if all investors, they use technical analysis. They use technical analysis and they see, wow, the stock price will goes up. No one will sell the stock at that one because they will wait for the stock price goes up higher. No one want to sell. You cannot buy. This is another disadvantage for technical analysis. It means that, and here, if someone see, wow, that's one, everyone know that the stock price will continue to go down, no one wants to buy anymore. And the market is frozen. Because everyone knows, we just earn money in case just few investors know, and lots of investors they don't know. But if now you see, for we have many companies that provide technical analysis and they support for that. So many investors they can buy and they can read. And when they predict the stock price go up, they put the stock price goes up like this one immediately, and we cannot earn profit when it go up significantly, and we cannot buy at that price. Do you get that point? I mean that for technical analysis, suppose everyone use it, and at that level, they think that wow, the stock price will goes up, and the stock price will go up. So that means they will increase. The sellers they do not sell the stock price at that price, but they will sell at that price. And when you recognize this, you cannot buy the stock at that price. You cannot, because for other investors, they also know that the stock price will increase. So they don't sell the stock price at that one for you. They will sell at that price. But when they sell at that price and you buy, you got no profit. Is it clear for that point? And to everyone, again, I mentioned that this is for resistance level. And for resistance level, they say that whenever the stop price break down, the stop price will continue to go up. And in case it go like this one, yes, you can earn profit when you know, but for all investors, they don't know. So you buy here, and few days later, you can sell at a higher price. However, if you know and all the investors know, no one sell the stock for you at that price because they know that the stock price will continue to increase more. One, they keep the stock, they don't want to sell, or they will sell, but they will set up a very high price here to sell. As a result, when you know about that, but you have to buy the stock at so high price here, you got less profit to earn. It's okay for you? I mean, that's for the big problems for the technical analysis here. If just few investors they use it, that's may fine. It may work efficiently. But if everyone knows that and everyone uses it, now it's useless. It's okay to everyone? It's okay or not? Because we study online, so to make sure that you can hear my voice, and I mean that I'm teaching and you are studying. So whenever I ask a question, please just tell me to make sure that okay, we are working together. If I ask you the question and no answer, I just may wonder about the quality of the internet and maybe you cannot hear me. It's okay? Yeah. Thank you. Thank you very much. And sometimes we cannot determine the resistance line, but we determine about the resistance zone. Nothing. And now we move to the pattern. What does this mean about the pattern? Actually, we have many patterns to learn. And here, one of the most common and still work well until now, we call this head and shoulder. Very funny here, right? And you see, whenever we observe like this, suppose we don't know about the stock price for this period, we don't know. But whenever we observe like this one, we say, oh, it looks similar to the head and shoulder. And remember about the principle before that historic trend repeat. And now we think that in the past, whenever the stock price move on that shaft, later on the stock price will go down. And when we see the pattern, we predict based on that, we predict that, okay, the stock price will go down later. Someone can explain that here. The sellers, they always want to sell at a higher price, and the buyers, they always want to buy at a lower price. And from this one, you see, the seller wants to push the stock price goes up, but they cannot put more because if they push more, the stock price go up, no one wants to buy. That's why they fail, and the stock price goes down again. They will try to push again, the stock price goes up. But after that, can it go further? And after reaching at the high price, the stock price go down again. And for the next time, like in Vietnam, we say that cannot over for 3 times. It's right. Later on, the stock price will go down. One pattern, quite common and also quite easy to observe. This one we call head and shoulder. And here, sometimes we can determine head and shoulder by the zone here rather than just one point. Because for one point may be difficult when you see here, you say, oh, no, you cannot recognize about the head and shoulder pattern. But if you look a little bit larger, yes, we can have the head and shoulder zone. Here, why I put so many charts for head and shoulder? Just want to prove to you that, okay, history trend repeat. And you see many times, okay? Whenever we see all charts here are real charts. And you see, whenever the one we can observe, okay? Whenever the stock price move in the head and shoulder chart, later on, yes, the stock price will go down. Another case here, this one I didn't go, but just check from the real price and we say here, okay, goes down, go down. Another example, go down. So when we see many times, many times, whenever the stock price move in the head and shoulder, next time the stock price will go down. And for this one, they also tell you about the trading volume. For the technical analysis, the trading volume you see here also quite very important to tell you. And normally here it tells you about the stability. If, for example, I mean the stock price increase with small trading volume, do you think that this one is stable? If the stock price increase, but with the small trading volume is measured by the number of stock are traded in the market. For example, you can see the stock price can determine at $50,000, but the way that the market determine about the price when they report it, just whenever buyer and seller match together, they determines about the price. And suppose buyer and seller, they meet together and they sell 1,000 stocks. Even though only 1,000 stocks are traded in the market, but this price is determined. And also we have 1 million stock are traded at 50,000. It also determines for you the stock price. That's why they mentioned that we also need to look at about the trading volume. And for the stock market, you think that sometimes the stock price increase with small or large trading volume will tell you about the stability of that trend, the trend of that trend. My question is again, now you got uptrend And the uptrend here with a small trading volume. On the other hand, with a large or the high trading volume. I prefer to say high and low. This may be better. Which one you think that the trend, okay, the strength of the trend is better, is stronger? Which one? With the low or high trading volume? What do you think? When we see about the trend, it's that, right? For other, I see that's only one ton. Yeah. How about for the student? What do you think? You think that high trading volume or low will make the market, the stock price trend is stronger? What does this mean about the stronger? I mentioned. I mean, it goes up, but if it's not strong, it will go down again. However, if it's strong, it will continue to go up. But if it's not strong, maybe it's go down again. So now, have a look. Suppose you and I are friends, okay? And I'm holding that stock. I'm holding that stock. And I told you that now we just make the transaction. That I will sell the stock right at this one at very, very high price. And of course, no one wants to buy, but because you are my friends and you, okay, you will buy. And whenever there is the transaction occur in the market will record that, okay, the new price is determined. You know what I mean? This is the way that sometimes investors, they manipulate in Vietnamese stock exchange. Suppose here, I keep 1 million stock. Okay? And the price of stock A so low. And you know, Vietnam, we have the policy that, for example, today at that stock price here, tomorrow the stock price needs to move in the range with the maximum that price increase and minimum. For this one, we call this a ceiling price. And this one we call as a floating price. And so here, people, they can do that. And from next day, they can make it increase. As a result, the falling price also have to increase. Ceiling price increase. And now I keep 1 million the stock price, and the stock price is so low, so I can tell you, as you are my friends, that's okay. We make the transaction, and I will sell at very, very high price with small stock. Okay, and you agree to buy small stock with a high price. Maybe next you use my own money to buy. Who knows? That's right. And we buy at a high price. When the transaction occurs, the market will recognize that, okay, now the new level of the price is determined. Okay, so that's why trading volume is very, very important. If the trading volume is so small, think about that. The stock price increase but not strong enough to maintain for the long term. On the other hand, if the trading volume is so large, it means that no manipulation here. So large, I cannot, okay? And you cannot buy with a stock at a so high price. We just cheating for the small trading volume. So when you look at the market, trading volume will tell you about the trend as well. If the trading volume is large, it means that many investors in the stock market, they think about that. They agree with that determined. And the new trend is strong. and more stable. Okay. On the other hand, for other investors, they don't involve. Just few investors, they think about that and they bought the stock. However, you see, the new trend is not very, very, I mean, it's not strong and maybe it's very weak and it may go back later. Do you got that point for the trading volume? Do you got that point? Hmm? That is explain to you why for technical analysis, we look at about the stock price movement and we look at about the trading volume as well. Another example for you to determine about the pattern, and sometimes we have the reverse pattern, head and shoulder here. And next time we estimate that the stock price will go up, opposite with the previous one. And here, also another example to prove. Just many chart here to prove for you that the pattern head and shoulder work well. That's the no purpose. This is the main purpose. That's why you see why we see many charts and they are similar. Just the main purpose is to prove that okay, this pattern work well and we see we can observe in the past many times whenever we see the head and shoulder, for example, like this, the stock price in the future will increase for this case, and here this will decrease for this case, for example. That's why you see in this slide so many similar charts just for that purpose. Okay. And another one, they call this is the double top. For the double top, they say that here, whenever the stock price reach the top, this resistance level for 2 times, and after that it fell. I mean that it fell to break the supporting level for 2 times, the stock price will go down. That's why we call double top. In practice, maybe you think, wow, it's so easy. It's right to use the technical analysis. However, here, I show you another funny story here. I need to look at this one. Okay, we'll go back later, but this one. Here, very funny. Now, they introduce about the triple top. It means that before, did you remember that? They mentioned that whenever we observe the 2 times that the stock price break the resistance level and it failed to break that level, next time the stock price will go down. But actually, no. If we think about that and we buy the stock at this, and we sell the stock at this one, we short sell the stock, we will lose money because after that the stock price increase again and it go later. It means that there is some time here to wait. And who know about that? Maybe, you see, again, if you apply the top, double top, for double top, you think that's, oh, the stock price will continue, will go down like this one. And when you think that the stock price will go down like this, you may short sell. That's one. Okay, short sales mean you sell the stock. Even though you don't have the stock, but you sell the stock, and next time you buy back. You buy back again, okay, to pay for the investor whom you borrow the stock. And you see, if we apply the double top, wow, it's good. This is a good chance for us to stock sell. And we think, and normally when you borrow stocks, you need to tell them how long you will give them back stock. Like you borrow the stock from me for 3 months, for example. After 3 months, you have to give me back the stock with some interest. And you see here, if you follow this one, you buy, and after 3 months, you expect that the stock price should be lower, and you buy back at a lower price, you give the stock to me, and you earn some profit here. However, you see, next time, no, the stop price goes up again. So in sideways, okay. And for this case, they introduced that okay, triple top, is right. And for triple stop, they say okay, if double stop does not work, we have another one for triple stop. And for triple stop, at this one, we think oh, the stop price will continue to go down. So we right. You see, if we follow the first case, after 3 months, you have to pay back me the stock and you have to buy back the stock, and that's one. I will grow again for you to see. You see, suppose we don't observe this, just we are now. And we are now, we see double top. And we think, oh, the stock have already reached 2 times and failed to break. It means the stock price will go down. And if we wait for so clear signal, maybe we earn nothing. So we should take advantage by sell at that price, because when we sell at that price, we will buy back later. Even though we don't have stock, you can borrow stock from other investor for 3 months, for example. And after 3 months, you need to buy that stock again and you pay to investor. And when you borrow 3 stock and you will sell, I suppose, yes, okay, you sell at that price. After 3 months, based on your prediction, the stock price should move like this, because you remember that for previous case, we have double top, right? And after 3 months, you think you can buy back at the low price and you earn a huge amount of money. But actually, no. For this case, the stock price continue to reserve. And after 3 months, you have to buy at that price. You see, you still have to buy because you promised that you will pay back the stock after 3 months. And you see here, you sell, and for this time you buy, you lose money. Okay, and you say that oh, double top maybe not safe. Okay, so maybe we need to wait for triple stop. And for triple stop here, so for this guy, is right. You think this is a good time for you to sell the stock and you will buy back later. Sometimes technical analysis help you to earn money like this, right? Then you see and you predict the future stock price movement and you take advantage. But sometimes you see the markets can be continue to sideways again like this one. So you see, that's why not easy to earn money. And you say, oh, if we wait for that one, it's not clear, we may wait for that point. Is it clear? For example, it's clear, okay? And you see, you may want to sell at that price, but again, even though, 5,000 stocks are traded in the market, it still determines the stock price on that day. But if you keep 50,000 stocks, if you have 50,000 stocks, number of stocks on your hand, and in the market, only one investor, they want to buy at 5,000. Okay, like this one. You say, so you can sell, of course, but you can sell only 5,000 number of stocks. Now you see, I mean, if the signal is so clear, difficult for you to sell at that one. Even though you see here, and maybe you can sell, but just few investors want to buy, and they can buy at a small amount of stocks. Do you know what I mean here? When you see the market here, you say, oh, market still work and the stock still trade. That's yes. However, on that side, maybe investor they only trade at 5,000 stocks. And for you, because at that point it's so clear to everyone to know that the stock price will continue to go down. And you see, if it's so clear, no one wants to buy the stock at that price. They will wait. They will wait for stock price go down further. And they will wait. It means that you tend to sell at that one, but you cannot. Or you only sell at 5,000 stock. Maybe you can sell up to 50,000 stock at that level. So low for you to earn profit. Did you see how market work and how technicals they have to do? I mean, you can take risk here, and you take risk here. You may got chance to lose money when the stock price goes up. And it's better if we wait for quite clear signal at that price. And for the quite clear signal, everyone see that signal, not only you. And everyone know the stock price will go down. That's why when you want to sell, but for buyer, they don't buy, but they will wait. They will wait and they expect that the stock price will go further. So if you want to sell, you have to reduce the price. Maybe this is the price you want to sell, but finally you have to sell at that price. Because for one day you come to the market, you sell, you determine the price you want to sell, no one wants to buy. You have to come to the stock market for the tomorrow and you sell again, but no one wants to buy again, or just few investors. And next few days, the stock price have already reduced at the price, and you lose money. So for technical analysis, two things: take risk, action earlier, but it means that half and half you lose money. The second way, wait for the clear signal. But you know, when we call it clear, it means everyone knows. And when everyone knows, they are also smart and they will do to take advantage. Rather than they buy stock today, like for example for me, when I see the stock price in downtrend, rather than I buy stock today, maybe no. I only buy if the stock price continue to go down for today. Or maybe I wait for a few days that stock price continue to go down. So for today, if you want to sell, but too few investors want to buy, it means that you cannot sell even though you want to sell when you see the clear signal. Okay? Is it okay to everyone? Yes. Okay. Thank you. Thank you very much. And now that's why I showed you the double top and I show you that the double top may be not enough. And after that, you will see about a triple top they mentioned, is right? But sometimes triple top is also not enough here. But sometimes it's work well. So that's why in any case, we have to take risk if we want to earn money. This one. And we have a triple top but in the reserve way, like this one. When we see triple bottom, the stock price will goes up. And here, they argue that here, this is the time that the stock price break this one. And they will combine with trading volume. And you see, when the trading volume increase significantly and it's quite stable, it tells you one indicator tell you that the trend is now quite strong. It means that it will set up a new trend and continue to move. If the trading volume here is just a little bit here, a little bit, maybe for tomorrow the stock price go down. Because why? Do you remember that from the beginning we talk about the ground, and when the graph move, which reflect the graph about the volume. Do you agree with me? If many investors in the market, they agree with that. Regardless about the right or wrong, it means that, okay, the stock price and the new trend determined by the ground. However, if the trading volumes is just a little bit, maybe just few investors, they think about that, but the rest not. Maybe tomorrow, the rest of the world will change the way. That's why we say the grounds and we focus on how we look at the ground combined with the trading volume. Normally, they tell you that whenever there is a new trend, trading volume will increase significantly. This one. You see here, this one. Sometimes you see, and very interesting here, whenever the stock price go down at that level, supporting level, you see the trading volume increase. It means like many investors, they wait for the stock price go down at that level, and they think, wow, this is a good time to jump to the market because the stock price is cheap already. They will buy. That's why you see the trading volume in that day increase significantly. Another one here also increase significantly. And here, one investor, they determine that, okay, the new trend have already determined. It means that in the future, the stock price will go up significantly. Here, many investors, they want to buy. And you may think about if everyone expect, is right? Everyone expect that the stock price will continue to go down, sorry, to go up. Why? Many investors still agree to sell. Do you agree? Do you agree with me? When we see here, and we think, oh, it means that the stock price break this one, and it will after for triple bottom, the stock price will goes up. And when the stock price goes up, we agree that okay, the stock price will increase. However, what does it mean for the trading volume? Why so many people they agree to sell at that price? Why don't they wait? Do you agree with me? Why don't they wait so that the stock price increase more? Do you have the answer? If you have the answer for this one, any. As long as it is reasonable, you got a bonus. Do you catch my question? I mean, we discussed that, okay, this signal is so clear, okay? And we expect, you and I still expect that the stock price will go up. Why the trading volume in the market is so high? It means that many investors, they agree to sell. Why don't they wait? Why don't they wait so that they can sell at a higher price later? Yes, good answer. Maybe, do you remember that? For some investor, whenever they see this one, they worry that the stock price will go down, so they will sell. Exactly one reason. Another reason, wait, which one? Yeah. For the investor, because we don't know what will happen in the future. Now we sit here and we see, so we feel comfortable, but actually just imagine that here, nearly to reach the resistance level. Maybe the stock price will go down later, and if they bought the stock price at that one, it's still good for them to sell to earn profit. Do you agree? For short-term investor, if they involve in the stock price at that level or at that level, for this one, they think it's enough, it's good for them to realize the profit. Exactly. Yes, I totally agree with all your explanation. Exactly. Like for example, Nim, you mentioned that maybe the box at a so low price, and now the profit is high enough for them to realize. Is right? Because why? If they don't realize the profit, is right, the stock price will go down and they lose the profit. That's why they think, oh, it's enough. Even though in the future it can increase, but no one knows. So it's better if they realize the profit and check a good, it's right, good sleep. Exactly. Mhm. Yes, so that's why you see, yes, the main reason is they want to realize the profits. And this one you will see focus for some short-term investor. And don't forget, in the markets, many investors they invest for short-term and think it's enough, it's good enough. Rather than tomorrow, what happened if the stock price goes down? Oh, we miss a chance to earn money. Is right? Exactly. They're afraid. Yes, I agree with you. So very interesting here. First, the trading volume increased significantly. Tell you that it means that now the markets are very active. The second one, when the trading volume increase, it tells you the trends quite change. And here, is it better? You see, really better if after the stock price increase, the trading volume also increase. It means that it tells you that this trend is quite strong. However, if this one increase and the trading volume just at that one a little bit here, it means that be careful. This trend may go in the opposite side in the near future because in the market, just few investors they think about that. They expect they involved in the market. Right? Yes, exactly. And yeah, just another example for you to see about it. And you see here because this lecture talk teach you about the technical analysis. So they prove for you those cases, right? That's correct. They are correct. Mhm. Now we have another pattern. We call this is the wedge. And because you look at the wedge here, this is the fall. It's falling. So that's why we call this is the falling wedge. And how to determine about the falling wedge? We take the lowest price here and we take the highest price and here this wedge here, if it glow together, the new chance will be determined. And we combine with the trading volume here. And the trading volume increased significantly at that one. And they suggest you whenever you observe in the stock markets about the falling wedge, it means the next time the stock price will continue to, sorry, the stock price will break that one and goes up. Okay. And for the reason why it's like this, actually for technicals, the jury don't care. They don't find another reason, but they see that many times they observe about that and they got the conclusion on this one because they mentioned that everything have already reflects on the price. So we look at the price, it tells us everything. Okay, and here about the trading volume, how the buyer and the seller they think and how to make decision. And here, like you see in the channel, like sellers and buyers, they are bargaining. They are bargaining and see. Finally, at the end of the day, one must win, and who win? That's all. And they felt that whenever this occur happen, this one here demands increase more. Yeah, demand increase more, and the seller win for this one when they can sell at a higher price, and the buyer, if they want to buy the stock, they have to pay at a higher price. And we always got the opposite pattern, like we got the triple top, we will have the triple bottom. When we have the supporting level, we have the resistance level, we have the falling wedge, and so now we have another one, rising wedge. This one here just also provides you another example for another days of another stock. They tell us here, have a look. Whenever you see the falling price, yes, believe next time will go. Now, my question is, if we are here, what should we do? Should we buy stock here? What you do? Should we buy stock here? Should we buy when we are here? We don't know in the future. Should we buy stock? What do you think? Could you please tell me, if we are here, what should we do? Should we buy stock? Because we said that, we have already studied falling wedge. It means that next times the stock price will go up. So we should buy at the lower price, and next time we sell at a higher price to earn money, to earn profit. So the question is, should we buy stock at that level? Could you please suggest me? Yeah, on say that we should wait for the better confirmed sign. Okay, for other, yeah. So 2 points, right? Both of you got the 2 excellent points. One, and say that we should wait, because what happens if we buy here and next time the stock price like this, is right? Who knows? And we need to wait. We need to wait for the clear signal here. Yes, and also Tuấn Anh, they mentioned that if we wait for the clear signal here, it's right. And many investors, they study about the falling wedge, so they will act oppositely to earn profit. Yeah, so it means that you mentioned that rather than they buy. So Tuấn Anh, I like this point. Could you please explain more clearly for me? And you mean that they act oppositely? It means that what they will do here, they will sell. Here, exactly. Yeah, there are two groups. One you want to buy, and one you want to sell. Okay, so exactly. The group of buying stock is larger. It's right. They will buy a lot. Is right. And when they buy a lot, the stock price does not move like this, but maybe it's move like this one. And we cannot buy at that one. When many investors, they know about the falling wedge, the stock price does not move like this way, but the stock price will move like this. So here, the question is, should we buy or not? If just few investors know, okay? One, if we buy, the greasy maybe it's not clear signal and the stock price go down. So we need to wait for the clear signal. I agree with one. And also, I wait for the clear signal. Then I mentioned that there are two groups. And if many investors didn't know about the falling wedge, it means that with clear signal here, the stock price will go up. They won't sell, is right? Rather than they sell, but they won't sell. Or they only sell at a very high price here. Yes, exactly. So that's why Tuấn mentioned that he will sell the price before it's adjusted. Before it's adjusted, so how we know? If we wait for the clear signal, maybe too late. Is right? Because I love that point oppositely. Oppositely. So rather than they want to here, yes, rather than they sell, but maybe they don't want to sell at that price and they will buy. Okay, here I got that point here. For example, investor A, rather than they want to sell stock, and this one, so clear signal here, tell that the stock price will goes up. So rather than they sell, they may change to they don't sell. Or they only sell with a very high price. Or they may buy stock because the stock price will increase further. Do you agree with me? For investors, from the beginning, they may want to sell the stock, right? But with the clear signal here, they may don't want to sell and they will wait for the stock price increase higher, or they only accept to sell with a high price. Because why? Everyone knows that for this point, the stock price will increase in the future. That's why they just don't want to sell. They just keep the stock, or they will sell at very high price. Or if they got money, maybe they will buy more rather than they sell. Do you agree with me? That's right. When I say, and yes, and for you, you see, it's right, like I said before, this is risky point. We should wait. I totally agree. We should wait. And when we wait for the clear signal, if they don't sell, we cannot buy. It's right. If they sell at a high price, this is not the price we can buy. It's must something here. Or other buy as well. So it means that we have to compete with other buyers to buy stock. As a result, we cannot earn much money. Do you see how market work and how investors they react if they all based on technical analysis? Do you agree with me? Is it right? Chapter 1. I forgot in the class only 2 students. 3? Okay, thank you very much. And I got another point from Tonan. Yes, actually, in the market, we divide by 2 groups. You're right. The buyers and sellers. And who are more dominant will determine about the price. And they also explain by this. This is the bargaining between the buyer and seller, and who will finally at the end. Okay. For this one, the seller. Yes. And the seller win, but actually for this one, we imagine that the buyer groups are larger. So that's why they buy a lot. The demand increase more compared with the supply. And opposite side, before we have the rise, falling wedge. Now we have the rising wedge. And another one here, suppose we are here. What you do? Please, chapter 1, what you do? Could you please suggest me? We should wait or we sell the stock because it's kneeling. It's a good that's one. And if it break that one, the stock price will go down. If the stock price go down, we sell. In case that we have stock, in case we have 2 cases. If we have stock, we sell and we buy back later. If we don't have stock, we can short sell. Anyways, you can do. And could you please suggest to me, if we are here, what should we do? Yeah, Baowen said that we should sell. It's right. Yes, we should sell here to get money, and after that, we should use smaller amount of money to buy back again to earn profit. Yeah. For other students, what do you think? To Bảo Nguyên, if you don't have share in Vietnam, we are not allowed to short sales, but in America, if you don't have share, you can borrow share from other investors. And suppose you promise to them that you will pay them share with some interest next 3 months. And when you got share, you borrow share. So now you got share, you can sell. That's we call this a short sale. Short sale, okay. In America, investor can do that. If investor expect that the stock price go down, okay, they will borrow share and they sell to got cash, to got money. and they will buy back later at a low price, and they got some cash. Yeah, and for other, just only about win and one make decision. How about the others? What do you think? Father, what do you think? Lanchi wait. And other? Okay. To make sure that you are here, so please type the answer for me. Everyone, I mean, to make sure that you are here and you are listening to me rather than you just write us and after that you leave that. So please, everyone, tell me your decision, your money, your decision. Don't worry about the right or wrong. It's all right. Don't worry about the right or wrong. This is your money. This is your decision. Just tell me. To tell me that you want to wait or you want to sell or whatever you like. As long as your name occur and to make sure that okay, you are learning. Okay, it's good. And so have a look. If you make decision that sell, it's right. Because remember for me, we don't know what will happen later. We don't know. Okay. And the stock price can goes up again. Because the grass like this, and maybe sometimes it does not occur later, or maybe like this one. If you you still got the chance to lose money if the stock price don't continue to do like this. So one, I do not criticize your decision. I just show you the circumstance can occur when you make decision. So you sell, you may earn profit, but what happens? You will lose money as well. For some investor, some students, they want to wait. That's right. And to wait for the clear signal. And it's occurred here. And when it's so clear signal here, the stop price may be move like this way. And even though we want to sell, but just a second, or even though just from 2 hours later, before we make decision, the stock price has already reduced significantly. So you cannot sell at that level, but you sell this one. It means if you wait, yes, you got low, very, very low risk to lose money. But also it means that maybe it is so late to earn money. So that's why you see high risk, high return, low risk, low return. But it's also the disadvantage for the technical analysis. Mean in any case, you still have to check risk if you earn money. It's not sure for you. you still have to take risk if you action at that point. Okay, so you have to take risk, and you have to take risk to earn money. Technically, not fundamentally. So it's up to you. If you want, you can do. And for some strongly averse investor, they may wait for the clear signal. And when we wait, we reduce the probability of losing money. But on the other hand, maybe so late to earn money. So, to circumstance. For some people, they said earlier, what it means? They will lose money as well. That's right. And we are safer. When we are safer, it means that the chance for us to earn money now is smaller and smaller. It means that we go back to the same. High risk, high return. And what we expect for technical analysis, we should expect that we take low risk. Do you agree? And high return. But actually, the technical analysis provides us with a high risk, high return. It means that it's normal. No advantage anymore. Do you agree with me? Do you agree? I mean that the technical analysis is valuable in case we can take low risk and we earn high return. But if we want to earn high return, we have to act at that point. And when we act at that point, this means that now we have to take high risk. And for high risk, we can earn high return. Otherwise, no. This means that technical analysis does not provide us advantage. It's okay? Do you agree? Yes, it provides us the chance to earn money, but it's not really the advantages. Okay. So here, just some for you to see about the Russian word. And I'm sorry that I have to tell you that you are in the third year. It means that you are senior students. And this course is selective, that's right. So it is better if we select this one and we want to study. Don't be so passive. You know what I mean? First of all, you are mature already. And in the class, it's a very, very low risk or maybe risk-free investment. You just give me the answer. And for that answer, even though I ask you, do you agree or not? Just please tell me, agree or disagree. And it's meant the more times your name occur in the window chart, we can look back again and you got more chance to earn bonus. So please tell me your opinion. You can agree, you can disagree, or you may want me to go back to discuss or whatever. But mean, is it better if you think that you are mature now and you got your opinion, you got your idea, and you see lecturer as a friend, we discuss together. It's okay? It's okay to everyone? Yeah, so don't be worried. Don't be shy. Just tell me whatever. Or even though you don't want to type, you can tell me yes, no, or any point you want me to discuss again. Okay? Yes. And remember for me, we come to the class with the open environment. Very, very open. We are friends. We study from each other and we can debate, we can argue, whatever. Don't worry. Okay? And now I introduce you a new one. They look at the stock price and they connect from the highest and the lowest. And whenever, even though they no stock price here, but they connect from this one and they see, they call this a symmetrical triangle. Symmetrical means you see this one equal to that. And it creates for you about symmetric triangle. And very interesting here for that pattern. They not just predict about the stock price movement in the future, but they also predict here about how stock price move. Like this one. The maximum the stock price can move the estimates here from equal to that gap. Yes, equal to that one. It means that from that one when it's break the triangle, from that one they will estimate, and after calculating, whenever the stock price goes up at this point, it means that the stock price will go down later, and they will determine to sell the stock price, to sell the stock. Before, for example, after determining about the symmetrical triangle, and suppose the stock price at this one, and you bought the stock at that level. For this one, maybe many investors they want to sell the stock to realize the profits as well. Okay, but if you are the expert in technical analysis, you can calculate and you see now the stock price here will continue to increase in the future. Even though you see here, someday, and we call this one is for minor, someday the stock price can reduce. But if you are the expert in technical analysis, you won't be worried because based on your calculation, you think that the stock price still increase and the highest level should reach at that one. When they measure with the gap here, this one. Okay, so that's why for other investors, they may sell the stocks, but if you're experts and you know about that pattern, you can wait, you can be patient, and you will sell the stock at that price to earn the huge profit. And in practice, to find that it's based on your skills to observe, to see. Let's see. And here another one, triangle. And very interesting here. The side we can and trend. Is you have know this or we wait. But we do something, always the chance, waiting for us as a losing money. And we say that we should wait. However, when we wait, maybe so late for us to earn money. Is right? Do you agree? And so you hear two sides, but they suggest a totally different direction. This one, and they say whenever the stock price breaks that level, it will go up. But here, the stock price here, you see, for this day, here, another one, it can be go down. It can go down as well. You see? So that's why be careful. If we are sitting here, we really don't know, and we have to wait. And when we wait for the clear signal here, or we wait for the clear signal here. But again, whenever we have the clear signal, it means that everyone know, and everyone know they do not give us chance to us money. The stock price, yes, still go up, but it's go like this. Or the stock price will go down, but it will go like this. Right? And you see here, something very interesting here. And many patterns. I just, and for the final exam, we will have the one question related to technical analysis. But I would like you to apply the knowledge in practice. So that's why you go home. From now, you can go to the website. You can choose any stocks that's any peers, and you will, based on that, try to observe and determine about the pattern, determine about the trend for the stock, and you print at the page 4, submit to me in the exam day. Is okay? Trouble one. Rather than I provide you the chance in the exam, it's not really interesting, and maybe you worry, you cannot see and you cannot observe. I prefer that you do this at home, and you can go to the website, choose any stock that you like, as any periods that you are interested on, and you take a chance, observe this one, and determine either any pattern you can see, any trend, and you can discuss on that. And this costs for 10 points, and you just print out page A4 and submit to me in exam. Is it clear to everyone? Like you can go to take the Vinamilk, for example, for the 6 months, and you observe is there any chance, any pattern. Is it clear to everyone for what I say? Okay, thank you very much. And again, with the ascending triangle, also triangle, but before we have a symmetrical triangle, and now we have the ascending. Ascending, you see here, this like this one, and we got this one. So this here, this table. And again, but the same story. What should we do if we are here? We said that okay, it's good. We should sell earlier, otherwise, other will recognize this one. But again, don't forget the chance that the stock price still go like this. And we said no, we should not do, and we should wait. When we wait, again, if the stock is so good, you can hold the stock, but you can hold the stock at a higher price, so you can earn profit. Remember for me, you can earn profit, but the profit is normal, not abnormal. It means the stock is good, you have to pay for higher price to hold that stock, and it's fair. You cannot buy at so low price to hold the good stock. And if you can do that, you can earn abnormal return. Abnormal return means that low risk, but you still earn high return. However, it's fair. If the stock is good, we have to pay higher price to hold that stock. And it's fair. And when it's fair, you still earn the return when the company generates the profit, but the return you earn is normal. Okay? And for technical analysis, what we are trying to do, we are trying to use technical analysis to earn abnormal return. You see, to an abnormal return. So that's why whenever we say that we should wait for the clear signal, and whenever we wait for the clear signal, it means that we can earn return, but maybe so late to earn abnormal return. If we act so early, still what chance to lose money. It means that's what is the advantage for the technical analysis compared to the fundamental analysis. Maybe not really clear because anyway, if we want to earn high return, we still have to take high risk. That's right. This is just a main message we discussed for today. However, I still show you the pattern and very interesting in practice. Technical analysis still work well. It depends to you. It's up to you what you want to do. And this time, I just introduce you and you can go home and have a look some pattern. We have another one, triangle. And here we could descend in triangle. And whenever it breaks the line, that it sets up the new line. And again, the question is, what should we do? We wait or we do something? Okay. And this means that the return with us is not abnormal anymore. Just some pattern for you to be more familiar with the pattern. That's all. Sometimes we got another one, rectangle. For the rectangle, it's similar to the triple top like you see here. Is right? And sometimes double bottom. So when the stop right here, what is it? It's when the stop right here. What should we do? What should we do? It's up to you. And you say maybe you want to sound because the stop right will reduce later, but no one knows. Maybe at this one, and when the right there, it continue to go up. So you lose money. And if you say that, oh, should wait for the clear signal. But again, when you wait for the clear signal, the stop right move to this one goes down significantly because when many investors, they want to sell the stock, it means that the stop right will go down significantly. It does not move like this way. Yeah? So that's why very interesting that the company they provide the technical analysis, they try to marketing, they try to sell as much as products. They want to sell the product as much as possible. But on the other hand, when many investors got that one, the values of the technical analysis reduce. That's right. And another one, rectangle. And you see here, for this case, we also have here triple bottom. So what should we do? But on the other hand, we also got here triple top. What should we do? Anyway, we really don't know what occur inside later. We really don't know. We have to wait. One is more like this, or another one. It's more like this one. So it means that we still have to wait. Okay. And some pattern, I think you can have a look now. I introduce you a GRAM indicator. It's a quite common indicator, and actually it works quite efficiently in the practice. First of all, don't need to worry about what they calculate. I just provide you in case that you are interested in that. But for us, we use it as a user. So we don't need to got that formula. We don't need to find out the rationale behind that formula. But we should know how to read the result. Okay, we should know how to read the result. That's why here for this slide, just give it away. I just provide you for the information if you want to read. What we focus here, we focus on how to read the result. And here, how to read the result. This is the stop price. You see, the candlestick tell you about the stop price. And when you look at here, they will calculate based on the formulas that I introduced you, and they will set up It's up to you. For some investors, for 7 clear signal, they may set up at 80 or 20. But for some investors, they want to earn the higher profit, so they want to act earlier. They may set up at 70 and 30. And you will see, we will look at the relative strength index, how it's moved. And here, parallel with the stop price. So based on the stop price movement, they will calculate the relative strength index and they measure. See, they mentioned that whenever relative strength index break this one, we say that the markets have oversold. That point. And when markets oversold, what should we do? Could you please tell me? They tell us that here, whenever the relative strength index at that one, we say overbought. And whenever the relative strength index break the blue line, we say this is oversold. Exactly. When the market is over, you see, oversold, it means that this is a good time for us to buy. So we act at the opposite to the market.